Welcome to Momentum Monday. Howard, happy birthday. How old do you feel?
53. How many is that in Canadian years? About 70 years old. I have celebrating. I took an Adderall today. I'm getting a lot of shit done. What about you? How was your week?
My weekend was very busy because I was finishing a book, which is...
What's the name of this book?
The book is Swing Trading with Options.
It's going to be a great one. I'm working on one, Ivan, Modern Trend Follower, so we'll have 2 books out. I still think we got to go back and redo it. Apple is the next Apple. That's a great book. As Apple hits all-time highs. I think people will be excited. Ivan's market. We're really working on a great premium, all-in-one product that Ivan and I have spent a lot of time on with all our books and stuff. So I'm pretty excited to. Take a month to put this together, but it's going to combine all the workflows of Ivan and I, and so I'm pretty excited about that. So Ivan's coming over. Next thing, Ivan's coming over. We're going for my favorite tacos in Little Italy. Ivan, have you been there with me?
I don't recall, but it's my treat, so I'm coming.
Well, then we're going to go for see, your treat. It's expensive sushi's closed today. Okay, buddy. Shiba's going to join, and my wife's going to join, and a couple of people are going to join. Should be a nice taco lunch. Okay, let's get right to the market. Get rid of our faces and go right to the market. Give me. Last week we covered so many ideas, Ivan. Where are we at? Did anything happen this week? I've just kind of been just out of it and focused on angel investing in my portfolio companies. I haven't really been. I sold down some Stitch Fix and some Twilio and some other big winners, but I haven't really followed the market. So walk us through what's up.
Last week, we saw a pretty decent bounce in the large cap stocks. I mean, you can see the Nasdaq 100 bounce from its rising 50-day moving average, but so far it has not been able to break to new all-time highs. So today we're seeing some weakness, a renewing weakness. So that's a lower high. So hopefully it holds that 180 level, because below it might get a little more volatile. Other than that, we saw a bounce in lagging sectors. For example, many Chinese stocks bounced, attempted a bounce last week. We don't know if that's a dead cat bounce or maybe the beginning of a more sustainable recovery. Many of the Chinese stocks are down 30 to 50% for the past 6 months. So they're in a bear market of their own, while no one in the US is watching. Many of the emerging markets are under severe pressure. Typically technical bottoms are formed when beaten down stocks or sectors stop going down or even rally on bad news. So this week we might have a chance to observe that. Let's see how the whole Chinese sector will react to any new tariff news. And if they don't sell off, if they rally, we might have the foundations for a more sustainable recovery. But that's a big if. As usual, the market reaction is more important than the news. Other than that, for the most part, U.S. stock indices continue to consolidate through time.
All right, so let's get right to the market of stock. I mean, listen, the market's had a good year. It's the stocks, though, that are having a great year. Last year, you mentioned some logistic breakouts. So let's go backwards and start with some stuff that we ended with last week because they weren't on my list.
There were some breakouts in trucking companies. As you can see, they didn't follow through. So we had a big breakout on Monday, then we had a down on big volume, and now we have a low volume pullback back to the previous base. So maybe if you missed it, this is your chance to.
Love this. Okay, so this goes right on my list, Echo. So where do you, if I may just try a little bit here, but I guess if it takes out the highs, you've got to get long.
I mean, it's a risky bet. It depends on your view on the market. I think for this week, I don't really see that many great long opportunities. I mean, things can change quickly.
No, but if you took that entry, you'd still be in this trade, or no?
Well, my stop would be at 34, 33.50. So
you got hit. Okay. Okay, I like that. What else in the trannies? Did they hold the breakout?
Which ones?
Transportation stocks.
As a sector, I think they look similar. So I mean, they're still above their breakout.
Yeah, but not a sector. Didn't really follow through. What about biotech? So a lot of these breakouts are just kind of.
Biotech is weakening, which is very strange because late last week we started to see some very bullish setups in individual.
Yeah, it's like Amgen, and that's kind of just sputtered along here. Yeah, still holding, but I mean it's going to give up if the biotechs roll over here. Okay, so what looked great for a couple weeks is now kind of giving back the ghost. So things are falling back into basis. Okay, that's something to take note of. I noticed that with my NASDAQ idea, NDAQ, it rolled back into its base. And I added a little bit today. I actually added a little bit today, but that looks weak. And maybe at the 200-day in the mid 80s you get. So a lot of breakouts just are not working. I love this.
Reversing, yes. And some of the large cap techs are not looking especially bullish.
Yeah, only Apple, I guess.
From the big six, only Apple and Microsoft are kind of holding well, and most likely Apple will enter into a range here after that big 15% appreciation after the big earnings gap.
Yeah. So, listen, I think we wrote about it yesterday. We called one of the greatest walls of worry under President Trump. They've thrown everything at this GOP. The GOP have not made it fun to be a news watcher or political watcher unless you are a Fox fan. So this wall of worry has worked. I think what we can see is this, I call it this wall of house of pain for international. If you look at Germany, Japan, let's go through some of these. Germany's a mess. Let's look at Japan. Not as big a mess, but not pretty from all-time highs 6 months ago. Let's look at China. So you can see, the trade war, listen, there's something to this trade war. And Ivan, I would say this trade, Brazil, there's something to this trade war. I think what Trump and the Republicans have gotten at, and maybe some of it is right, you can, blind squirrel, is that these deals that countries had with the U.S. might have been too good for the foreigners. Whether Trump knows what he's doing or policy fixes this, but there's just going to be unintended consequences. So far, the markets are acting as if deals are going to be better in favor of U.S. stocks. Look at that. But now we have the law of unintended consequences. How will China truly react with their markets down 30 to 40%? And this is when you get into, we've had late stage breakouts across the U.S. And you have to be really careful. Breakouts can turn into losses really quickly. So S&P still looks fine. The NASDAQ still looks fine. Software stocks, I haven't continued to break out. But they are extended. I mean, I don't know what you want to own. You like Zendesk 50 points ago.
Yeah, 40. Extended. They could easily have a 20% pullback at this point.
Well, 30% and still be an uptrend. So again, this is an area where I like that logistic sector. I like biotech, but they are pulling back and they're not following through.
Caterpillar is starting to look interesting.
Yeah, but I don't want to own these stocks. Like I don't need to own low growth global multinationals. I like to own high growth stocks. But yeah, some of these multinationals, Boeing, Caterpillar. I mean, if you need to be in the market, some of these are starting to firm up.
Yeah.
So there's plenty to trade. we could be getting tired, and we could be entering a phase seasonally and trade-wise where unintended consequences for some of these stocks start catching up with themselves in the U.S. Okay, so I'm not that excited about much. Let's go through the SL50, Ivan.
Yep.
Anything new shows up, but we'll keep it short today.
Yeah.
Align is a really interesting company. I miss that. Align is like a mall-based kind of orthodontics company. It's just had an incredible run. It's 3 weeks on the list. Splunk is a big data company. Wix helps people make websites really quickly. You still see a lot of the same, Match Group hit a new high. So you still see a lot. This green dot is really interesting. We've talked about it a while. I don't own it, but it's been on the list 15 weeks and up a huge percentage, which is back-end software for banks, new banks. Do you see anything new there? Callaway is interesting, 6 weeks.
There are a few new stocks, but they're not really doing amazing so far. And what you can notice is that we have quite a few stocks that are down more than 2% today. And that table is showing the real-time changes in prices. And when a stock is down more than 2%, it's just colored in red. So when you see so many red boxes, I mean, these are all
to market wisdom. You can have this all in real time, right, Ivan?
Yes. So these are leading momentum stocks, and when they're underperforming, when you see so many red, then I mean, you should cut your long exposure in the market in general, at least for the next few days. That's
if you're trading. I mean, I'm in games for months, so it depends on but it's just one little insight into if you're a swing trader. Yes, you have to be on the defensive, not on the offensive. Which is where you're at right now. And but there's a lot of interesting, wide-ranging names from retail to software to payments to enterprise software to data to banking, infrastructure. Okay, so I think it's a quiet week, Ivan. I think we're going to. Is there any this is one you mentioned last week, MedPace, right?
Yes. So they tried to break out today. They were up about 4% at some point, but the overall market weakness is just pulling it back.
Okay.
So breakouts are starting to fail. I mean, this is something that I noticed in the past few days. So today, for example, I haven't made a single trade. Like last week, I probably had more than 10 trades, and I had an amazing week. This week, I'm cautious from a swing trading perspective.
Yeah, from a new idea perspective, I don't think there's any rush this week. Last week, you could have put on a few ideas I did, and they're not working. You got to work your way out of them. But we can see, like you said, Google, Facebook, Baba. There's a lot of rollovers. Apple's kind of led. But it's a $1 trillion company, so it's not like an undiscovered idea, and these stocks can quickly pull back 10 to 15%. Okay, so it's going to be a light week. And anything on the calendar for next week, Ivan? Is there anything big happening?
I'm not aware of. I mean, I don't really follow the calendar that closely, so I just look at price action, and for me, it's important how the market reacts. So yes. If there's any important news, the market will react, and now we will just.
Yeah, like I said, I think we're entering this era of you can't see Germany and China trade this weekly without either the relatively. I think this is going to affect the U.S. Either Germany and China start playing catch up, while U.S. goes sideways, or U.S. plays catch up on the downside. But I think. There'll be some volatility as these markets kind of correlate a little better globally with the trade wars. We don't seem to be backing down. The rhetoric's still pretty high. U.S. economy-wise is going to be flooded with money as we fix the floods in North Carolina and the East Coast. So I think that could be why Boeing and Caterpillar, Ivan,
they're definitely
generally rally around tragedies. Some of these big cap names, so be careful chasing them. And I think that's it for today. Thanks, Market Smith, for the charts as usual and support. And if you want mentoring in real time from Ivan, Market Wisdom. more of a short-term swing trading strategy that I think more long-term, but within trends, Ivan is the master, and Market Wisdom is just a great way to get mentored and have a great list of ideas daily to choose from. All right, buddy, have a great week. I'll see you for lunch in a bit.